The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 13th day of April. My pleasure to be here, and this is a fascinating market. Let's look at the Dow. It's up 9 at 20,600. The S&P is up 2.25 at 2347. Fascinating. Look at this chart that I've got right here. This is the 2-minute E-mini. Objective always is to get you to a D, and you got your D right there, and it is making the cup formation. In this cup formation, a pullback of 30 to 50% suggests that it will probably retest the bottom of the cup formation. So we'll just look at this very closely, and we're looking at if there's a close below 2342, it's at 2343.50. There's a real good chance that it's going to test the low of 2340.50. Made it at 1040 this morning. Now, if it breaks to the upside, look what happens. This is a very important moment because in the 10-minute chart, we've gone from the 2. Now we're going to the 10. We're already in leg D. We went to a D in the 2-minute chart in a different formation. We went to a D. We've just gone to a D in the 10-minute chart. This is the E-mini. And the reason why I'm focusing on these shorter-term patterns is to show you that within the context of markets, you can have bull phases and bear phases. It depends on your time frame, and that's what I'm going to be talking about when I do my webinar a week from tonight on the 20th, Thursday, for subscribers. If you aren't a subscriber, you can just sign up and you'll be able to get a trial, but at the same time, you'll be able to come to the webinar. This is going to be a really important webinar in the sense that now we can go through the market itself. When I'm looking at we can use the E-mini as an example. The E-mini daily since the 1st of March has made a high of 2397.25. This is the June contract. Has been coming down, but it's essentially used time, 3.5% or something like that, between 2397 and 2317. And no big deal because it's used time. But the pattern suggests lower lows and lower highs is going to be the continuation pattern for now, number one. Number two is, at the close today, if there's a failure pattern going into this afternoon as people get a little nervous about a 3-day weekend and you start to see the 9-period moving average being taken out in the weekly charts, now let me go through that. Look at the Dow, INDU. The Dow is trading at 20,594. For days, it's been under the 9-period exponential moving average, which is at 20,630. We're now at 20,595. Sure, it can get there, but the MACD and stochastic are not really showing too much strength right here, and that arch formation is suggesting that there's going to be a test of the 20,412 area for wave 5 in the Chapman wave, and that'll be leg D in the daily chart of the Dow. That's not really the issue. The issue is that the weekly charts, today, Thursday, being the end of the week, one day early because of the holiday. Happy Easter, everyone. Have a great weekend. In the meantime, what we're looking at right there is if there's a close below 20,595, I'd like to make it a little 580 to be a little safe. Then you've closed, not you, the Dow's closed under the 9-period exponential moving average. I put a down arrow. The Chapman wave 5 is confirmed. Now we're in wave 1 down, maybe even 2 up. But the most important aspect is that the MACD and stochastic are acting very poorly. Everything about it says that we should be putting a down arrow for a sell mode. I just want to wait because that's my methodology. I have to wait for the end of the week. You're looking at a weekly chart, so a weekly candle could do anything between the few hours left in the day. So does the S&P 2352 is a strong resistance. A break under 2332 would suggest that you're going to go down and test the 2322 low and start your leg D in the daily. But the weekly chart is sitting right on the 9-period moving average, so this makes it a very important couple of hours coming up. Everything about it suggests that I'm pretty sure that by the end of the day, regardless of what happens, I'm going to put a down arrow to say that there's a weekly chart sell mode in place. But what's the reason for waiting so long? Because the PowerShares QQQ Trust Series, the NDX 100 trading vehicle, has made a peak F in the Chapman wave at 133.48 on the 5th of, this is the 5th of April. The 1st of March, we saw the Dow and the S&P make their highs. So this is going to be an important moment. Why? I've already got a sell mode in the daily. But the weekly chart hasn't even given a sell signal. It hasn't even gone close to the 130.37. Well, I shouldn't say that. It did go close 3 days ago, but then it bounced. It went to 130.50, but 130.37 is the level to take out. So that can take a little while. And that's the reason why this webinar that I'm having for subscribers a week from Thursday is going to be so important, because by then I should have more evidence about what's happening in the Qs. Now, if the Qs give a sell signal, not a sell mode, because that's a deeper connotation, but a sell signal in the weekly chart, it suggests that there's a rectangle formation going on, and that until the QQQ series really starts to trade in the 129 to 128 area, we could go chop, chop, chop to the side. Now, the big thing is this. Let me just finish up with the other indices. We're going to go. I want to go to the gold. Gold was up sharply. Now it's pulled back. It's up 7.7. Still pretty good. This is a with the long-legged doji candle from yesterday. If we close above yesterday's high of 1,289, that's going to be very positive. If we close under it, it says, watch out, we could be testing the body of this candle, which means that the body of the candle, the open and close yesterday of 1277.2 and the close of 1278, in that 77, 78 area, there's going to be a test and a close below that says, watch the dollar. Here we go, the dollar, DXY. The dollar is, in fact, having quite a nice candle, but it had it should not have dropped like it did. It dropped late in the day after the president, I believe, said we got to have a weaker dollar. The stronger dollar is not good. But, you know, presidents can say whatever they want. Is what the action of the monetary and the fiscal policy that really dictates what happened. You remember when, was it Paulson, who every single day said, I want a weaker dollar, I want a weaker dollar. The dollar went up to 120 something every time he said it. So it's the actions that are more important than the words. And right now, the words are saying one thing, and the action is that the dollar is actually held very, very well. And that makes the action in gold even more important. And I'm suggesting, and I suggested it for a while now. Oh, I had a question about the Chapman wave methodology. How's it working in gold? Well, it's working fantastically. I had the V-shaped pattern. I got a peak, a trough, which started after the peak D pullback from the March high. It reversed back down. I got a buy sale, did everything. I just didn't trade it right because I wanted the GDX at a certain price, and I missed it. I missed it actually by, my subscribers missed it by just a few cents. We didn't get it, and then it just kept going higher. So that's kind of, so the answer to it is yes. Look at this. How cleaner can you get? A peak E at the top there, 2571 back on the 8th of February in the GDX, the gold miners index, plunges down, goes straight down, goes down to the 2114 level on the 9th of March, and then it rallies back up. Peaky and it stops dead at the 200-period exponential moving, 200-period simple moving average. So we'll talk about that when I get back. Basil Chapman, Tiger Technicians Hour. And, of course, we'll look at yields. We'll look at a bunch of things. And don't forget, this is your special that you can get. Go to the front page of TFNN to see how you can save 25 to 50% Tiger dollars.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, we're back. So now you remember that the 2-minute chart, what I'd said about this Chapman Wave drop bucket pattern, this double top cup formation, is that if it takes out 30 to 50% of the price between the left side lip and the cup bottom, there's a real good chance that it's going to retest the bottom. So here we are. We're sitting right now on this. I believe that is the 50 period. Yep, that's the 50 period moving average, that dashed line right there. Let's see what happens from here. We're almost at that level. So back at the ranch, we want to also look at the 10-minute chart right here. Leg D goes to a peak D. What do I mean by a peak D? And these are the things that I'll be discussing in great detail in my webinar coming up Thursday a week. Go to the front page of TFNN. Check it out. Look here. In the Chapman Wave methodology, what we always want to see is 4 higher peaks. That's the objective. Find the lowest, most identifiable low bar, and then count each successively higher peak. When you get to the 4th highest peak, D, I alphabetize them, A, B, C, D. They can go to E, F, and G, never more than a G. There's no H. This is where other things can happen. We just saw that. We went to the 2-minute chart, a leg D, it became a peak D. We went to the 10-minute chart, peak D started to stall. So that's really important. Yes, you can go to an E like the gold has just done here, the GDX. That's very important. But let me show you something that I consider to be one of the aspects of the Chapman Wave that at least helps you define where you are at a given point. That doesn't mean to say that you're going to get a trade correct, because you've got to use stops and things like that. But in this particular pattern, what we were looking for is a Chapman Wave stalk leg formation with the leg, the body, the neck, and then the head. And what I'd said is if there's a pullback from here with a leg D going to a peak D on the 7th of the GDX, be careful, because it should come back and retest the high that was made right there at that peak B at 2356. It did that. Now it's extended higher. It's still kind of the same pattern. In fact, it's more like what I call a propeller shaft. This entire leg with the fulcrum in the middle and the leg going up here to E. So this is going to be so important for what happens to gold and the GDX, because there are still signs of strength in the stochastic and the MACD daily. The weekly MACD is improving. The stochastic is just okay, and that's suggesting that this is more an emotional rally. This is my interpretation. And then we've got to look at the EUR-USD. This is the euro-dollar currency pair. And you'll see in this particular formation, It tried to rally for a couple of days. Now it's given quite a bit of it back. The euro is down a little bit. But what's really important is that you've got an arch formation fighting with a cup formation. I'll just give you the parameters. A close below 1.0569 would be really negative, and it's at 1.0629. And a push into the 1.070 area would be very positive, not very positive, would be a positive. Very positive would be going much higher than that. But that's what I'm looking at. And the USD JPY is right now at 200 period simple moving average support. MACD is still negative, although the histogram's improved a little bit, and the stochastic is better than it was before, but not great. So this is suggesting that the one at 109.21 up 0.23, the 200 period simple moving average of the daily, as well as the 200 period exponential moving average of the weekly at 108.33 is going to be really important, because if it closes in the 107s in the next week, then the dollar Japanese yen currency pair it's in real trouble, and that should in fact help the dollar. So that's why I'm saying the dollar, not great action, but it's really not bad action yet. A dollar trading in the 99s says, be real careful. The dollar's going to go quite a bit lower. All right, now we want to look at the TLT. The TLT is the Lehman 20-year T-bond fund. It looks just like, it's very similar. It's very unusual for this to happen, where the TLT, it looks the same as the gold chart, the GDX or the GLD. So what we're looking at here is leg E. Hasn't gotten to the 200-period moving average of 124.52, but it is at 123.08, down a penny. And the weekly chart has a very interesting pattern. It's the lowercase h. I drew that a long time ago. That goes to a lowercase m. Now, if the TLT, if the market continues weak next week, that means that money should come from the safety of, what was the safety of stocks, because stocks kept going higher, would be now the safety of bonds, because bonds are going high and stocks are going lower. So this is a very important moment in both in the daily chart formation as well as the weekly chart formation. If you look at the US, if the bonds themselves, bonds did touch the 200-period exponential moving average in leg F. It might have recycled even. And the weekly chart is really very positive. So I'm going back to that theme that I said, hasn't been changed, but it was on the cusp of changing, the Japanization of our bond yields. And if you want to know all the things that are going wrong in the economy, there are a lot of things that are not right, especially debt. Debt is really important. Paul had mentioned that the other day in an email, and I'm going to emphasize that a credit card debt is going back to 2008 levels. The automobile defaults are starting to increase tremendously. This is a period to be very, very careful in other aspects. So when I'm talking about the coda formation, what do I mean by that? I mean that this is an era that's matching the 1920s very, very closely. Back then, cigarette smoking became de jure, what everybody wanted to do, and women thought that they were with motorbikes and automobiles and smoking and drinking. You remember that's also when you got the prohibition was lifted. So that was an era where the suffragette movement really picked up, and women's independence was rife. I mean, that was something that was lauded. Well, we're in almost the same period right now. And we're looking at a situation where the socioeconomic, the political, the fabric of society is very much in the same vein. But also together with that, we've got these mega things. In Tel Aviv, they're building a 100-story skyscraper. I mean, it's fantastic design and everything, but does that make sense? This is not the period of sense. This is not the period where you've got to make sense of things. The mile-high building, that's going to be in Dubai. These are things that are icons to man's ego, or human beings' ego. It's actually mostly men, so it's man's ego. And because of it, we're in a very parallel situation. Doesn't mean to say we have to have a 1930s depression, but it does say that there's a coda phase that could accelerate in the stock market, where money starts to come back into the stock market by the lay people. And I think they sort of started over this year. they've been saying, hey, I'm missing all this stuff. What, 20,000? Who's talking 20,000 here in the Dow? Like, I remember when it was, and people will name 9,000, 6,000, 10,000, 12,000. So this is quite a feat, and I think it's going to impact world economies. Let's go to Rich in Portland, Oregon. Rich, how are you?
I'm doing well, Basil. Thanks for taking my call.
My pleasure.
I'm calling about new gold, symbol NGD. I just noticed that it seems like since the 1st of April, this thing finally stuck its head above the 50-day moving average after obviously some bad news in January when it went from, like, on the 23rd of January, it closed at 431 and then dropped even lower than
it went to into the 240s, yeah. So, okay, so we've got a break coming up. I'm going to just do some notations on this. NGD trading at $3.38, up 9 cents, up 2.74%. That's big. This is New Gold. We'll be back with Rich in Portland straight after this break. Dow's up 5, S&P's up 1.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back, and we're looking at NGD, which is a New Gold Inc., trading at $3.37 for Rich in Portland. So I can't remember, Rich, you say you have some, or you've just been watching it and now it's started to move, so you're kind of interested?
Yes.
Okay.
I'm interested in.
So this is a fascinating chart because I love when I do my analysis to see that a chart, once it starts a buy mode, it likes to go to at least a D. Well, this thing started off back on December the 20th at $3.01 and went to peak A, B, C, and then just continued. D, E, F, and the alphabet as the 9-period moving average kept going higher. The MACD went higher. The stochastic went higher until it went to a leg F and then plunged from the on the 24th of January, it was at $4.41. And just a week and a little bit later, it's on the 31st of January, it's at $2.39. That is a huge percentage move. What is it, 37% or something? And then it pulls back and starts a brand new move that goes peak A, B, C, D. Now, people often ask me, I'll do this because it's Technical Friday, except it's Thursday. Where is the most difficult to put an up arrow? And this always, when you've had a big plunge and the MACD just tumbles and the stochastic plunges, and then the stock or whatever you're looking at starts to move higher, it takes a while for those indicators to turn. But look what happened. You had a perfect peak A, B, C, and it goes to a D with a little doji high on the 16th of February at 325 before it pulls back. But it's pulled back and it never took out the low of the 31st of January of 239. Instead, it pulled back in a trough A, B, C. I think it's trough C. And then it started a brand new move. And what did it do again? It went to peak A, peak B, peak C. Didn't break C, and then finally it broke to a D. And all of a sudden, it's gone. In 3 days, it's gone to a leg E, much like the other charts that we're looking at. So here's the tough question for me is, every other time it's gone to the D, E, or F as a top, it's pulled back very sharply. But when it pulled back very sharply from the move, the little doji candle high on the 16th of February, it was a pretty sharp pullback, but it didn't take out the low. Now I'm saying, hey, is it making higher highs and higher lows? So this is what I'm going to recommend to you. I don't know what you've got in your actual, if you have a gold portfolio, if this is just in part of other things that you have. This is in an area of gold, the stock that you like, and it'll be your only position in the golds. I'm going to suggest, if it's would this be your only position in gold at this point?
No, it's not.
Okay. So if it's not your only position, I don't think you need to be in a rush, because we know that from D, E, and F, other times it's pulled back. The MACD and stochastic are very good, way better than it was before. So I'm going to suggest to you at $3.37, even though it could pull back to the 316 or even the 298 level where there's support, I'm going to suggest not to buy it today at 337, but to put a bid in at about between 321 and 314, somewhere there. I'd put in a bid, and it would be a starter position. Why? Because every other time it's pulled back, and it's pulled back pretty sharply. I've got a feeling this time it pulls back. I'm not sure this is the time that it pulls back sharply. There's this whole congestion area right here, where from the 28th of March through to the breakout candle of the 11th, so let's go to the 10th, it's been trading between about $3.08, somewhere around 3.10, down to 298, 297. So that looks to me like a good period, a good area of support. So I'm going to say, if you have other goals, I wouldn't rush to get this. I think you've got your eye on a stock that seems to want to be pushing higher towards the 357, where the 200-period exponential moving average is. So on a pullback, you don't have to be exact about it, but I personally would prefer to get it closer to the 9-period moving average of $3.16. That's where I would start a position. And if it doesn't break down within 3 days of you buying it, it doesn't break below the low of $3.03, which was the low on the 10th, 4 days ago. If it doesn't do that, in fact, it holds quite well. My thinking is, so let me just make this very clear. In the Chapman wave methodology, D is where other things can happen. But when there's a bull market unfolding in a particular vehicle, obviously, if it's going to go to higher highs, it's going to go to a D, and then it's either going to recycle, but it could have another whole series of A, B, C, Ds to the upside. So don't be afraid of the D or the E. Just keep in mind that that's where other things can happen. So I'm saying to be prudent, since you have other gold stocks, that's kind of the area where I would add this one. And I have to tell you, the weekly is starting to improve, so it's becoming quite a nice-looking stock.
Okay, Basil, what do you see as a possible target if it holds in here?
Okay, so the target initially is a very simple one, and it's that really ugly week of the 27th of January, 27th of January to the week of the 3rd of February, where it just went straight down. So the high of this candle of the week of the 3rd at $3.70, if it can close above that, that would be very good action and suggest that it wants to go into the next candle, and the next candle has a low of 383. That's the candle of the 27th, the week of the 27th. That's where I'd be looking. But the most important thing is, how does it hold support if there is just a breather in gold over the next couple of days? Maybe the market has a good bounce here. Maybe the semiconductors and the Qs actually do bounce a little bit before they go a little lower. I think they will be going lower. But in the meantime, I don't think I'd be buying NGD right here. Not the way it's acted previously when it's made D, E, and F, because it's always pulled back sharply. I just think that this time it might not be anywhere close to as sharp as it was before the pullback. That's why I'm saying buy it maybe 20 cents lower. That might be a better risk reward.
Okay, Basil. Thank you very much. Have a good holiday.
Yeah, and you too. And thank you for bringing it to my attention. NGD, I hadn't looked at it for a long time. Have a great weekend.
Okay,
Thank you.
Right.
So, folks, let's just go back to the charts that we were looking at. Remember my peak D that we made? Haven't broken out yet, and yet it hasn't broken down. So the 9-period moving average of 2342.50 in the E-mini, and the MACD's moving average, fast moving average, the green line, holding quite well. Stochastic is suggesting that there better be a big move, a move into the 2346 very soon, because the stochastic looks like it's about to start to weaken once again. So that's that. Now, a couple of things I wanted to do. I showed my subscribers to my opening call about 5 days. I don't remember what it was. Well, first of all, some of you remember I did this on the show. The day that I showed it to my subscribers, I said RACE, R-A-C-E, which is Ferrari, was in a leg F, and I think that it was about to make a peak F. And then at 74.99 on the 29th of March, it had a Chapman Wave 2-bar reversal, and it hasn't looked back since. No, it hasn't looked up since. It's only looked down. It's in leg E to the downside. The daily is in sell mode, and the weekly is still not yet even a sell signal, but it looks like it very well could be a sell signal. Why do I bring this up? Because if you look at Tesla, I wanted to bring out this Ferrari. I don't know where you live, but where I live, I see quite a few Ferraris. Now, if you lived in Miami, or if you lived in, say, San Francisco maybe, or certainly in the Palo Alto area, there are certain areas where you'll see a lot of Ferraris because there's been high-tech or whatever it is, biotech, there's a lot of money being made. So I'm looking at it and I'm saying it's a kind of an icon, but I've also got Tesla. And Tesla, I said, is probably going to make the same kind of peak effort on the 10th it did. I showed it to subscribers, and I think Tesla's made a short-term top. We'll talk about that as soon as I get...
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, folks, we're back, so we're watching this closely. Remember, the lowercase h is what we're looking for here in the 2-minute chart. Let's get back to nitty-gritties here. So one of the things that I'm looking at, Tesla, I think, has made at least a short-term top. That's my analysis right now. And one of the things that I heard over the last two days or so, a number of people are saying there's a buying opportunity here. And I'm saying to myself, I would love for there to be a buying opportunity. I just don't see where. Maybe I'm wrong, but if I'm starting to get a sell signal in the QQQ series, let me just get there. And as I say, until you start to see the Qs trade in the 128s, this is just preliminary. But look at this. I went through the charts. I don't know if I want to do it again today. All these different charts. I mean, let's NetEase, it's one of the great stocks of 2016 going to 17. And then all of a sudden, boom, look what happened. I just don't see it. I don't see what's going to lead. So that's what I'm busy working on now. What could we see in terms of leadership going into? That's going to not be immediately. I think that this if the Qs are only starting their correction now, they should have at least a month and a quarter like the Dow and S&P have had, even though it's delayed. So I don't see that right now. I do see maybe short-term buying snaps opportunities. I don't see much more than that. And what would be the sectors? Are we going to lose the oil sector completely because there's just so much competition? There's just so much oil being produced. Does that just kind of eliminate some of it? Is there a difference between? I don't get into it too much. I used to do a lot of it, and then I just didn't. I stopped. I should not have stopped, but there were other things I was looking at. But are we looking at maybe the refiners? There's a difference between producers and refiners. Is that really what we're going to be looking at? So let me just go through this as I'm looking at it. You see crude oil right here, leg D. Now the potential peak D, and a peak D, fourth highest peak. It is one of the key metrics in the Chapman wave methodology that we look at all the time, the fourth highest peak. What happens there? Do you get a restart? Do you get some kind of a pullback? Is it just a gentle pullback? Is there a Chapman wave instant restart where it goes to a whole brand new 4 peaks higher? Or does it break down? So I'm watching crude. I'm looking at the stochastic, the MACD. They're both really strong. A lot's going on. And that's the reason why I don't think, as I said to subscribers this morning, even with the volatility index, and I haven't done that yet, the volatility index screaming to the upside, hit $16.22. Look how long it was down under 13. Weeks, months. And now all of a sudden it's showing life. my thinking here is that this could possibly even be a peak E right now, not an A, but an E in the VIX. It could pull back a little bit, but it doesn't mean to say that the market is going to scream to the upside. It means that the VIX is just regenerating energy after a spectacular move. And don't forget, we've got until 4 o'clock today to get this weekly close in a leg D. Does it close above 15.60, which is really negative for the market? This is the volatility index. Remember, I go by numbers. It's not the whole makeup of it. I'm not interested in that. I'm interested in just the price numbers. And for ages, I've been saying in the 13s or higher, be careful. In the 15s or higher, you start to see strong double-digit to triple-digit declines. We haven't seen that. So my big question for myself is, and for my subscribers, is have we seen the volatility index suggesting that there's a high degree of hysteria, not necessarily built on fact, but just hysteria, emotional suspense and scarediness, which has produced a higher VIX? Because the Dow at $16, I would have said to you, if you said to me, the VIX finally hit 16, I would have said, oh, really? And the Dow must be at 20,420 or 20,370, somewhere around. No, the Dow's at 20,600. So all I'm saying is that we've used up time, we've usurped some energy, but we've got to wait for the sequences to unfold. In other words, like the semiconductor index, nice move. I had 76.20 as the left side, right side price time support level, and it came in at 76.39 this morning, a nice little bounce. I think it's still going lower based on the weekly chart below the 9-period moving average. The day is young. We'll see what happens. But yeah, that's what I'm thinking. And I think that this is a leg C. Okay, so here's the big issue. The monthly charts are still in leg C. Only the Dow is in leg D, and I can't remember which other index is in D. So it says to me, S&P, leg C, it says there's more to come. When does it start is the question. How does it start? And what essentially will be leading it on the way up? And over the last 3 days, I'm finally, in my mind, becoming more and more... President Trump, who has been an enigma wrapped up in a big question mark, for me is not so much anymore. I think I finally figured out, I had figured it out earlier on, and then I didn't worry. Wasn't on my focus. And then all of a sudden over the last 2 days, his actions are telling me something that's really important. And I think I finally understand it. And I think I'm going to be able to use it a lot better now. And one of the things that I'm looking at is its result. That's all that counts, is the result. And when you think about it, the market, regardless of what's been said and what's gone on, and bombs that have been, and rockets that have gone off, the S&P is at 2347. The high was 2400. It is only 53 points off its all-time high. That's not a big deal under these conditions. So I think we've used up time, and I do think that the QQQs, Amazon, and all those other stocks that we talk about, I think they need to take a breather. I'm calling it a breather for now. It might be more, it might be less, I don't care. But I do think that the tops that were made, like Amazon, the top on the 5th of April at 923.72, I don't think that's going to be revisited too quickly based on the weekly chart. Price line. Oh, well, we don't have to go through them. I went through them the other day. Same sort of thing. Time, a little bit more than price. I still only have it in a C, in a peak C in the weekly chart. So I wanted to get that out of the way. Now the other thing is the most important. I'm going to look at the XLF. The XL, the questions in the den. That is the question, Basil. When? Yeah, I'm working on the time. I think I'm getting closer to the time aspect. But most importantly, look at the XLF. Nice little candle today, but it did take out the, let's see, 22.98 was the low, and 22.98. Double bottom right now in the XLF, in the H pattern. So that's a very good sign. The MACD is pulling back. The stochastic's pulling back. Histogram's not that good. It's still negative. I think there's still more time left in the XLF, the financials. If you look at Goldman Sachs, I'm always asked about Goldman Sachs. Goldman Sachs hasn't taken out the left side low, hasn't even tested it, but the weekly chart is not that great. So yes, I think there's more time involved. I don't know yet about the price, but I am getting a greater sense of time at this particular stage. So let's see. Yep, we've got one more segment to go. I've got a couple of questions I haven't been able to read. I'll read the questions in the den, and when I get back, I will try to answer them. Heckler Mining. Whoa, nice candle, Heckler Mining. Good eye. I'll be right back. Basil Chapman, Tiger Technicians out. Dials up 4.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, folks, let's just do this. Let's have a look at that old 10-minute chart right now. Still at peak D, up, stuck in the middle there. Considering where we've come from, Dow plus 9, S&P 2 plus 2, that's really poor. It should have been plus 63 on the Dow, plus 8.75 on the S&P. Maybe we'll still get that today, but so far, this is really not that great. So, yeah, HL, which is Heckler Mining, very good, gapped up today, leg. I'm calling this an F, but in the Chapman Wave methodology, I always circle when there's within 3 bars is a leg E, is a leg E/A. So this could be an instant restart, except the MACD is suggesting that we could even go to a G and then have a deeper pullback. So I think that gold is getting real close to some kind of a digestive phase, and at the same time, that's going to say, hey, maybe the market rallies into early next week. If we survive the weekend very nicely, we'll be looking at that very closely. Now, what's really important about this move right now is that the VIX index is saying to me that without bad news, down 79 cents today, without bad news, just fear out there, this is not good enough. What I need to see is bad news with the Dow down 3 digits, down minus 150, 130, the S&P down minus 17, minus 16, and I want to see the market open that way, try to rally intraday, and then close at the low of the days. That's really what happens in a bear phase. So all we're doing here is a consolidation phase. There's a big difference, and that's the reason why we've stuck to being short the different indices, the Dow, the S&P, the Qs, as well as some of the sectors. But in terms of individual stocks, I'm still looking for things to buy. I'm not just ignoring the fact that you could get, this is not one of those Joe Granville 96% stocks go down in bear markets type scenario. This is a rotational correction. And that's the reason when I look at, say, Facebook, the Facebook trading at 140 right now after making a peak F, that's negative, very negative in the daily. But look at the weekly. The weekly hasn't even recognized that the daily has moved on to a different place. And in fact, until Facebook at 140 made a high of 143.44 on the 5th, and it's only down 3 points, but until it takes out and closes decisively below that low of the 22nd at 137.60 after that peak D, you're not going to, this weekly chart could just go sideways for a little while. So we might be using time rather than price. And that's the analysis I'll do over this 3-day weekend that we've got, because it's going to be really important to define when I do my workshop a week from tonight. Remember, go to the front page of TFNN. Besides those fantastic Tiger dollars, save 25%, save 50%. What a break. That is fantastic. Sign up for my webinar. Besides the fact that if you sign up, you can get a trial subscription, which means you're basically getting it for free. This is a great time because I'm starting to implement positions that I think could survive this pullback. And I'm also starting to implement more of the either get out of town type thing. Maybe they're sells, maybe they're shorts. I don't know if I even want to bother it. We've got a pretty full position in my traders corner. They seem to be working well. We got taken out of our multinational. It was Chevron. I made a tight stop. What is a 1-something point stop? Hey, failed. I'm out. Less than a percentage, we're out. At 109.90, we got out at 108. 108, I think it was. So I'm not prepared to mess around. It was working. It didn't work. But I still have something that I think is holding pretty darn well in one of the areas that's interest rate related. So let me just do this. We're about to wrap. I'll be back with Tom O'Brien later on this afternoon. In the meantime, back at the ranch, the VIX index, what we want to be looking at is the VIX is at 1499. If the VIX starts to come back a little bit into the 1520s and the market gives back a chunk of the little bit of a gain that it's got here and starts to go down minus 30, S&P minus 4.5 by 2:30 this afternoon, I'd say be careful. A lot of people don't want to be hanging on to long positions over this particular weekend. Have a wonderful Easter. Otherwise, I'll see you on Monday. Otherwise,
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN. TFNN.